All righty. Well, good afternoon, everyone. Thank you for joining us today for our Text Talk. This is our first Text Talk for 2025. We are so excited to renew this series. This is going to be the first of many this year that we hope to bring you, and we will go ahead and get started. And just a couple of quick reminders. The content shared in this webinar should not be considered as financial, investment, tax advice. Before making any investment or financial decisions, please seek out advice from professionals such as personal financial advisors, tax advisors, or other experts who can provide guidance tailored to your specific financial situation. Keep in mind that insurance products are not insured by the NCUA or the FDIC and are not a deposit, product, or any other obligation or guaranteed by Texans Credit Union. This webinar is being recorded, and this will be up on our Texans Credit Union YouTube page within a few days after the webinar. We will push a notification to our social media channels when this is ready. So if you don't follow us on Facebook or Instagram or LinkedIn, please do. And then we will open up at the end of the section time for some questions. So please feel free to use the Q&A feature. We have some people who've already answered or asked questions, so thank you very much for that. That's it for housekeeping. Let's get to the fun part, right? So today we are joined by Alethea Brady from TruStage. Alethea is a national consumer insurance specialist with TruStage. Her role is to assist credit unions with their insurance strategy for auto, home, life, and accidental death and dismemberment, also known as AD&D. She most recently worked for Mission Federal Credit Union in San Diego, California. In her 7-year tenure with Mission Fed, she was responsible for overseeing all insurance products the credit union offered and their insurance agency. Prior to her joining the credit union family on the employment side, she was the CEO and owner of Token Insurance Agency Incorporated, where she leveraged the experience she gained in the captive market from both Farmers Insurance and State Farm. Alethea, thank you so much for being here today and sharing your knowledge with us. We're excited to hear what you have to share with us today. And without further ado, I'm going to turn it over with our hostess with the mostest, Alethea Brady.
Thank you, Josh, for that kind intro, and thank you for having me. I am excited to be here and talk about the insurance industry and kind of where we are, level set things, and I will go ahead and get started here. So yeah, today we're going to talk about auto, home, life, and accidental death and dismemberment insurance. But first, I kind of wanted to give a overall understanding of what is insurance, right? So at its core, insurance is a safety net. It's an agreement between you and a third party to kind of make you whole again, right? So when life's unexpected tragedies happen, we have policies in place that will make sure that we are made whole again. Now, why is it so important to you? In simple terms, it helps you to manage your life, right? And manage the risks that come with life. Unpredictable insurance and gives you the peace of mind knowing that you won't be left to bear the financial burden of a disaster on your own. So whether it's your car, your home, your health, or even your life, insurance ensures that you have that safety net for when the unexpected does unfortunately happen, right? So today there's all kinds of insurance that you can purchase out there in the marketplace. Today we're going to focus on auto. We're going to take a look at what your coverage options are when it comes to auto insurance. What are the right questions to be asking your insurance professional when you do go to purchase auto insurance? What are the factors that are going to raise and or lower your auto insurance rates? And we're going to look at the overall claims process. Also take a look at what's happening in the current auto insurance markets. And then also just some benefits of working with TruStage for your auto insurance needs. We're also going to take a look at home insurance. So very similar items there. What are my options with coverage when it comes to home insurance? What questions to be asking? Right now we are in a very hard property market. all across the United States. Some states are seeing it worse than others, but Texas is definitely starting to see its struggles as well. So what happens if you can't find a standard home insurance carrier? Again, take a look at the claims process for home and some benefits of working with TruStage. And then similar with the life insurance and accidental death and dismemberment. So what are the differences between life insurance and AD&D? What are your coverage options when it comes to life insurance? When should you be purchasing life insurance? And benefits of working with TruStage. So let's take a look at auto insurance. So there are many different coverage options. And again, when you do go to purchase your auto insurance policy, it's best to consult with your insurance agent. But first and foremost, you're going to need to have liability insurance. That's a state mandate in every state for you to be able to drive a vehicle on the road. And that's going to protect you against the bare minimum and provide you coverage to make sure that if you're in an accident where you hit somebody and they have injuries, they sustain injuries, or if there's any property damage, then you have coverage to cover those injuries the other party has sustained or any damage that the other party has sustained. It's also going to provide you with some uninsured and underinsured motorist coverage. So there are about 22% of people nationally that are driving around without auto insurance. It's a pretty shocking stat, actually. But the uninsured, underinsured motorist coverage protects you against those uninsured drivers. The underinsured part of that is states only mandate that you have certain liability limits. So, depending on the state that you're in, you might only be required to carry 25,000 per person, 50,000 maximum per accident, and maybe 5,000 in property damage. So with those, if you were in an accident with somebody that had those lower limits, the underinsured motorist coverage would kick in and provide you with additional coverage should the injuries that you sustain or the damage that you sustain exceeds those amounts. And then you can also go ahead and add some property damage protection to your policy itself. So this is going to provide you with what we call comprehensive and collision insurance. So you do pick a deductible option, and then comprehensive is going to protect you from anything. I call it active nature coverage. Basically anything where, a tree might fall on your car, your vehicle's vandalized, vehicle is stolen. This is also where your glass claims are covered. So that's your comprehensive. You have a deductible, typically around 500 to 1,000, more close to 1,000 these days to keep those rates lower. And then you're responsible for that 500 or 1,000, and then the insurance company pays out anything additional. With the collision, that is to protect your vehicle in the event of an accident. So that's going to, again, have a deductible attached to it, and then the insurance carrier is going to pay out anything above that deductible for the damage to your vehicle. And then I just listed here some optional coverage that you may include, like rental reimbursement. OEM coverage is original equipment manufactured parts. So not every carrier offers this, but it is something to ask about, especially if you drive a nicer vehicle and you want to make sure that those original equipment parts are being used to repair the vehicle. You can also add on towing and roadside assistance, and like I mentioned, some glass coverage. So let's take a look at some questions to ask your agent when you're looking at purchasing auto insurance. One really good question that I always make sure, if I don't get asked it by the insured, to ask them is, how much coverage do you need to protect your net worth? So you take a look at your assets and your liabilities, and whatever that net amount is, you want to make sure that you have enough protection to protect that net amount. And that really is going to make sure, that you are protecting your nest egg, right? And making sure that nobody can come after what it is that you own. And then another good question is when you're looking at your policy is, am I okay if my vehicle were to be in an accident and I don't have coverage on my vehicle? So that's that comp and collision factor that we were looking at before. Sometimes if your vehicle is starting to get older and the value of the vehicle is becoming less, it's time to evaluate that cost. How much are you paying for those comp and collision deductibles, and see if it's worth you still carrying that coverage on there. And that's really, assessment that you make with your own comfortability. And then, along those lines, also asking yourself, what deductible amount am I comfortable with? Should I have damage to my vehicle? Do I need rental reimbursement? So if you're in an accident and you're not able to use your vehicle for a number of days, do you need to have a replacement vehicle, and do you want to pay for that replacement vehicle out of pocket while your vehicle is being repaired? And then always asking your agent what the optional coverages are available to add to the policy, just so you know fully what you're able to purchase. Taking a look at any exclusions that might apply to your auto policy. Some policies have what's called a named driver exclusion. And basically what that means is if the driver is not named on the policy, then they are not covered to drive the vehicle. And so you want to make sure that you don't have that named driver exclusion. And if you do, just making sure that you add the driver to that policy. Asking them, if in the event of a claim, if you're able to use any repair shop or if they have to be a licensed repair shop. And then also, what eligible discounts do you offer? So a lot of carriers will offer discounts for occupation. Occupations such as educators, emergency response, professionals. Also multi-policy discounts. So if you have multiple vehicles in your household, you typically get a discount, or if you have a auto and home insurance policy with one carrier, they'll offer discounts for that. So just always asking what eligible discounts the policy has. Taking a look at what will raise and lower your rates. So just talked about it, bundling your auto insurance and home insurance or condo or renter's insurance is typically going to find you a discount. Taking a safe driving course. So the DMV typically, offers a safe driving course that you can take. And if you take that, typically an insurance carrier is going to give you a discount for taking it. Not having any claims and not having any tickets. I don't think that's a secret to anybody. Having claims and tickets on your record does make you a riskier driver in the eyes of an insurance carrier. So, and then also in the state of Texas, they do rate based off of your credit score. And so if you have a lower credit score, you're going to pay a higher premium. Now let's take a look at things that are going to raise your rates. So the type and year of your vehicle has an effect on your rate. So the newer the vehicle, typically the higher the rate. And then once those vehicles start to get older, you'll see the rates come down some more. And a lot of that has to do with statistical data. So they don't have a whole lot of statistical data on newer vehicles. And so until they are able to get that data on their books, they rate accordingly. Age and gender are a rating factor. So they can increase or lower your rates. And then your location. So moving to a different zip code can increase your rate. It can also lower your rate. And then again, having accidents or tickets or an unfavorable credit score. Utilizing your vehicle, having high use of your vehicle will also increase your rate. So let's take a look at the claims process and kind of what to do in the event of a claim. So documentation is going to be key here. So in any scenario possible, making sure that you have documentation. So license plate numbers, copy of insurance cards, photos of the incident, either photos of the damage or photos of the collision itself. Any witnesses are are really, really helpful and beneficial in an auto accident. And then if there is bodily injury, we definitely recommend that you file a police report. Sometimes if it's a minor car accident, the police will not come out to file a police report, but you can always file one online or go down to a local police station to get one filed. And then making sure that you're writing down the facts of the loss immediately. So when we go through a traumatic event, such as a car accident, we tend to forget, the facts pretty quickly. So if you write them down immediately after the accident, they'll be more fresh in your head. It's very important to call your carrier right away if there's going to be a claim, and make sure that they're aware of the loss, and so that they can kind of mitigate any future damage or evaluate the loss as well. You never want to admit fault at the scene of the accident, regardless of whether you were 100% at fault and it was obvious. You just want to stay away from admitting any kind of fault until the adjuster has had time to take a look at the claim and make a determination on their own. You don't want to get the vehicle repaired prior to the insurance carrier inspecting the damages. I think that's a pretty obvious one, right? You want to make sure that the carrier knows the full depth of the damage. Keep record of all communication regarding the accident, and then consult with an attorney if you feel it's necessary. If you don't feel like the carrier is answering your questions, or you feel like there's, it's a more complex claim, then there's always an attorney that you can consult with as well. So taking a look at our current insurance market, I've been in insurance for about 20 years, and we are really in one of the most challenging and volatile insurance markets I have ever seen. The rate in which carriers are pulling out of certain states for auto and home insurance is at an alarming rate. We've seen a lot of carriers stop writing auto and home insurance in certain states. And there's really a number of factors that play into this. So the insurance carriers are monitored by the Department of Insurance in every state. And every state has rules in place for how the carrier can come up with the rate that they charge. In recent years, we've seen the cost of reinsurance skyrocket. So insurance carriers actually buy insurance themselves, and that is called reinsurance. And so because we've had such an increase in natural catastrophic losses, and we've recently seen inflation go up, so repair costs are going up. People seem to be getting in accidents a lot more frequently, especially coming out of COVID. I think we all kind of forgot how to drive when we first got back on the road. And so because of that, carriers are seeing the cost of reinsurance go up a lot. A lot of carriers invest in the bond market. And so we saw a lot of carriers lose a lot of money recently from those investments in the bond market. And so it's just a waterfall of effect of lots of different factors that are kind of coming into this very challenging, hard to place property and casualty market. We're hoping to see, a little bit of a light at the end of the tunnel. We do see some of the Department of Insurance in different states working with the carriers a little bit more to be able to open up their appetite more. We also are hopeful in 2025 that we'll start to see those auto insurance rates kind of level out. Moving on to home insurance. So let's take a look at the different options available on your home insurance policy. First and foremost, you have your dwelling coverage. So this is going to pay for the cost to rebuild your structure. The amount for this is typically determined by your insurance agent. They run what's called a estimated replacement cost, and they'll ask you factors about your home. They'll look online about factors on your home and then derive a dwelling amount. And that actually kind of drives all of these additional coverages. They're typically percentages of what your dwelling amount is. You can increase them generally, but you typically can't decrease them from what the policy gives you. But so you have your personal property, and this is going to pay for your contents. One thing I will say here is you do want to make sure that you have enough, that the policy doesn't have any sub limits in it for your contents coverage. So for example, a lot of policies will have a maximum they'll pay out on jewelry. And so if the policy has that and you have any items that are valued higher than what that policy will pay out under, you can purchase an additional jewelry rider to go on the policy. Another aspect of your home policy is the liability coverage. So this is going to pay for anything that you may become liable for. A lot of times you can add what's called personal injury coverage, and that will also cover you for libel, slander, defamation of character. We don't see so many of those claims anymore. When social media first started becoming a big deal, we were seeing a lot of slander claims coming up, and so that was really important to make sure you had that personal injury rider on there. Another very important aspect of your policy is the additional living expense. So this is what's going to pay for you to go live somewhere else in the event of a loss. And so, think about, a catastrophic loss, wildfire, a tornado. This is going to pay for you to reside somewhere else while your home is being rebuilt. So very important that you have enough coverage there. You have some other structures coverage on there. It's typically about 10% of the dwelling amount. And that's just going to pay for any storage structures on the property, fencing, any structure that's detached from your main dwelling. You have a little bit of medical coverage on there, and that's going to pay for medical bills, property of somebody that's on your property and becomes injured. A lot of that's covered under your liability, but there is some covered under the medical pay. You want to make sure that you're if it's at all possible, you want to make sure that your policy covers you for RCT versus ACV. So RCT is reconstruction cost. So basically the difference between reconstruction costs and actual cash value is reconstruction costs is going to pay you what the depreciated value of the whatever it is that it's replacing. So for example, if you purchased a TV 10 years ago and you had a loss against that TV and you needed to replace it, reconstruction is going to replace it, or replacement cost is going to replace it in today's market. Okay, actual cash value is going to replace it for what that TV cost 10 years ago. You also typically have extended replacement cost coverage on your policy. So that's going to extend that dwelling amount a little bit above what you are already insured for in the event that that dwelling amount is not enough to fully rebuild. And then I just listed down here some optional coverages to take a look at. But again, always consult with an agent about the coverages that you are purchasing. One big one that I'd like to point out down here is the loss assessment coverage. If you live in a condominium and have a homeowners association, that loss assessment coverage is going to pay for any fee that the association assesses to you in the event of a loss. So a lot of HOAs have pretty high deductibles, and that's going to pay for any fee that you're assessed for their deductible. Taking a look at some of the right questions to ask your agent, I would recommend that you always ask for a copy of the estimated replacement cost that they use to determine your dwelling amount, so you can take a look at it and make sure that the right factors were used to determine that dwelling amount. If you have any high valued personal items, again, such as jewelry, artwork, electronics, that kind of thing, making sure that those are covered fully under the policy, and if not, taking a look at supplemental policies. Making sure that you have enough liability to protect your net worth. We already went over that one. finding out what the exclusions are on your policy. So I don't know any home insurance policy that covers you for flood. Flood insurance is something that you do need to purchase outside of a home insurance policy. Some states will exclude wind coverage, especially if they're hurricane-prone states or tornado-prone states. They could potentially exclude wind coverage. Earthquake insurance is also something that I've never seen on a home policy. You can add it via different earthquake authorities, or you can purchase earthquake insurance through a private insurer, which is my recommendation. And then if you're on the Gulf Coast, making sure that your policy provides you against windstorm and hail coverage. Asking about the extended replacement cost coverage. Not all policies include it, so making sure that it is something that's available to you. We went over the reconstruction versus actual cash value. Any discounts that you're eligible for. I touched on the loss assessment on the last screen, and what length of time the policy affords for coverage in the event of a loss. So sometimes your policy, after a loss occurs, the coverage only extends for a certain period of time. And so making sure that you understand how long that is. In the event of a claim, what are the best steps to take? So making sure that you're going to protect your property and mitigate against any additional damage happening, right? So that's going to be the first thing the carrier wants you to do is, let's say a windstorm came and ripped off part of your roof, making sure you get a tarp on the roof to prevent any subsequent damage from happening. You want to go ahead and make sure that you file a claim immediately with your insurance carrier. And then with the additional living expense, so immediately start keeping any receipts for claim or for food, for housing, for travel, and then you can submit those to the carrier to see if they're eligible for reimbursement. Typically with food and travel, they're going to reimburse for anything that you have to, for any cost that you incur that's outside of what your normal day-to-day living costs are. So yeah, making sure that you keep all those receipts. A big thing to do is make sure that you have all of your personal property cataloged. And what I recommend everyone do is take a video of the interior of your home in every room and in every closet. My sister lost her home in the Maui fires, and one thing that was very treacherous for them after the loss was having to go through and inventory all of their personal property, because you forget what you have, right? So taking those internal videos really does help to make sure that you're able to account for everything that you had prior. And then also finding out what additional resources are available to you. So, if you're in an area that's been deemed a catastrophic loss, multiple homes were affected by it, a lot of times the state will declare a state of emergency, and then other resources become available to you, such as FEMA, SBA loans, and things like that. So just good to check in on your resources. So let's take a look at the current home insurance market here in Texas. Why is my home insurance increasing? So we've kind of touched on this already, but I just wanted to drill it down really to focus on Texas. We have natural disasters in Texas. Texas faces frequent hurricanes, flooding, tornadoes, and wildfires, which are all causing to an increased cost environment, and also some carriers restricting certain areas. Inflation, everyone's favorite word these days, right? So the cost of everything is going up, and that's not short of building materials, labor, cost of doing business kind of thing. So it has become much more expensive to rebuild homes. I touched on the reinsurance cost. Again, just those insurance carriers that insurance carriers, their costs are going up as well. And then carrier availability. So carriers, we are starting to see some carriers pull out of Texas and or limit coverage that they're writing in Texas. And so it is making it a little bit more difficult for some folks to get coverage there. So the policy that you typically want to have is a policy with a standard carrier. All right, so they are a carrier that the state of Texas has evaluated, their Department of Insurance has evaluated, and they're authorized to do business in the state. Now, if you can't find a policy through a standard carrier, you have another option, and that's to go through what's called the surplus lines market. Surplus lines carriers are carriers that are typically outside of the state of Texas, and they don't have a license necessarily to sell insurance in Texas, but they are able to sell policies. And I know that's a little bit confusing, but they are able to sell under what's called a surplus lines license. And so they are able to provide that gap for if there's not any coverage under the standard market. But that is the big thing, right? Is the agent is required to exhaust all options in the standard carrier market before they offer you a surplus lines quote. And then the last resort carrier is the Texas Fair Plan Association. Again, it's your last resort. You don't want to go that route unless you absolutely have to. All right, so switching gears a little bit here, we're going to take a look at life insurance and accidental death and dismemberment insurance. So some of you might be asking, what is accidental death and dismemberment? We also refer to it as AD&D coverage. And it's pretty much as the title describes. So it's coverage for accidental deaths, covers fatal accidents, non-fatal accidents, dismemberment. And then our product also offers a living benefit. Not all AD&D policies offer that. And then there's certain riders that you can also add to the AD&D versus life insurance is covering you for your life. So in the event that you pass away in any way, shape, or form, life insurance is going to provide you that coverage there. So accidental death and dismemberment insurance provides a payout in the event of death or permanent physical injury due to a covered accident. As a Texans Credit Union member, you are all eligible for a no-cost accidental death and dismemberment policy with a coverage amount of $2,000, and that's the basic policy. You can purchase coverage limits up from there. You can also purchase these riders that can be attached to the policy. We have a cancer, heart attack, and stroke rider, as well as just a cancer rider. And they guarantee you coverage up to $20,000 for any one of those, should any one of those incidents occur. So, in the event that you are diagnosed with cancer and you need to take an Uber to go get chemo treatment, that it'll pay for the costs that are incurred from having cancer. We also include in there an increasing benefit or an inflation guard on our policies. So it's 5% a year, and it's up to 50% of the benefit amount. And that's over a 10-year period. And then, almost 40% of people in the US will develop cancer during their lifetime. So having those riders on the policy, we found to be very beneficial. We also actually just had a rate decrease on those riders. So let's take a look at some coverage options for life insurance. So we offer a simplified issue term life insurance policy, and that has very few underwriting questions. We collect some data from if you have any prescriptions from that database. You're looking at a face amount of $5,000 to $300,000 based on your needs and your affordability. And we also offer a simplified issue whole life insurance policy. Those coverage amounts are from $1,000 to $100,000. And then a guaranteed acceptance whole life policy, which is a guaranteed issue policy. There are no health questions, and that coverage is from $2,000 to $25,000. Just taking a look at some of the differences between a term life policy and a whole life policy. So a term life policy is only going to cover you for a set amount of time. 10, 20, 30-year term. And so after that time frame runs out, then the policy itself runs out as well. Whereas with a whole life policy, it is covering you for your whole life. And these are just some life events as to when we think is a good time for you to take a look at purchasing life insurance. Providing a financial net for your family, for your partner. If you end up purchasing a home, that's always a good time to look at purchasing a life insurance. And a lot of people will purchase those term policies. They'll purchase like a 30-year term so that in the event that they were to pass while they still had a mortgage, they are not leaving somebody with the burden of that cost of that mortgage. Obviously, when you have children, it's a good thing to take a look at purchasing life insurance. As you start to downsize, when you get into your 50s and you're starting to downsize, it might help to maintain the income level for any surviving spouse that you're leaving behind. It's also valuable for securing support for adult children and grandchildren. So yeah, there are many different life events where it's important to purchase life insurance, but I think, the overall theme here is making sure that you're providing financial stability for any of your loved ones. And this is just a little shortcut to show you how you can access TruStage on Texans website. So if you go to their products tab and click on insurance, and it will bring you to this page, and then you can click on either one of these widgets and it will get you to the auto quoting platform as well, or to the life and accidental death and dismemberment quoting platform. And with that, I will go ahead and open it up to any questions.
Thank you, Alethea, for that presentation. Or open it up to Q&A. I wanted to say a couple of things before we get to the questions, and we've got quite a few, so I'm happy that they have questions. A lot of people have asked before the webinar started, and including our staff is like, well, why are we doing insurance? Well, that's because insurance is a financial product. It is a tool to help our members, our communities with their financial needs. It's just not talked about a lot, and it's not treated in the same way as, credit or budgeting. So we want to make sure we are highlighting every financial topic for our members and giving them the opportunity to learn more. And we know insurance probably isn't the most exciting topic to talk about or reach out to do. But it is there, and we want to make sure we're doing everything we can to support our members on that front there. So with my little spiel out of the way, we'll go ahead and get some questions asked. So our first question, this is a bit of a specific question, and we will try to answer your questions as best we can. Please note that y'all may have to reach out to Alethea or TruStage as one-offs for specific situations, or reach out to myself directly as a financial counselor for the credit union if it's very, very specific. So just a little disclaimer for you guys out there. First question is, this individual had a house roof replaced 8 years ago. His his home insurance policy is renewed and the roof covered is scheduled instead of cost replacement coverage. The insurance agent said that if the roof is 8 years old, they cannot issue the cost replacement coverage. Is there an insurance company that still does cost replacement coverage for an 8-year-old roof?
Yeah, and that is a very specific question. I would work with your broker, your agent or your broker on seeing if there are other carriers out there that will insure the roof on a replacement cost value. You know, 8 years isn't too old. Typically we start to see them lower, not insure the roof for replacement costs at around a 10-year mark. So, but it does just depend on the carrier. Every carrier has their own underwriting appetite, and that is something that I would certainly work with your agent on to see if they can find a carrier.
Agreed. The next question is TruStage a broker or an insurance company?
That's a good question. So the answer to that is it is both. So TruStage is an insurance company. We underwrite all of our own accidental death and dismemberment policies and life insurance policies. We used to underwrite the auto and home insurance policies as well, but we've since stopped underwriting that and partnered with Liberty Mutual to be able to bring those products to you guys.
We got a vocabulary question coming up is, what does loss ratio mean?
Yeah, so your loss ratio, and that's really something that a carrier looks at, and they are determining, how soluble the business is, right? So they're taking a look at the premiums they're bringing in versus the losses that they're paying out. And if the losses exceed the premium that they're bringing in, then you have what's called an unfavorable loss ratio. So it's really something that insurance carriers use to gauge how viable the product still is.
And then this one is, actually, this is a question I get a lot as well, is at what point should liability only coverage be considered an option on your vehicle?
Yeah, so I think I touched on this briefly in the auto portion of it, but really you want to look at a few different factors. You want to look at the age of the vehicle, the market value of the vehicle, and determine, in the event of a loss, am I okay not getting any replacement on this vehicle? Am I okay, kind of self-insuring for this vehicle? And so, there's a few different factors, but really what it comes down to is your comfortability. But my main thing that I typically will look at for somebody is how much are they paying for their collision coverage and how much they're paying for their comprehensive coverage. And if that amount over a few years exceeds the value of the vehicle, then typically I'll say it's not worth carrying those coverages anymore.
Also, please keep in mind that any vehicle you finance through a credit union or bank, they will require you to have multiple coverages. So if you don't have that on there, we can put something called CPI on your loan. And that kind of leads into another question is, Alethea, if you can define what CPI is and how it affects the borrower.
Yeah, so CPI is collateral protection insurance. It's also referred to as force-placed insurance. So if you have a loan on your vehicle, the credit union or the bank wants to make sure that they are made whole again in the event of a total loss. And so the CPI is really just covering your loan balance. It doesn't provide you with any liability coverage. It doesn't provide you with the state mandated coverage to drive around your vehicle. it is protecting the financial institution's interest.
And to quickly cover that, what we see a lot of times, and at least on the CU side, is members will say, well, I provided you a copy of my insurance card already during the loan process. That can happen. And yes, members are correct, you did. But remember, that is a insurance policy that does not have either the new vehicle, or if it has your vehicle, it doesn't list the credit union as the lien holder for the loan. So make sure that you are sending in an updated insurance card to your credit union when you're going through an auto loan process. They should have a department or an individual that can help you make sure that we do verify that you have listed them as the lien holder on your insurance policy, so you don't have to go through with CPI. This question is a math question, kind of. Is a 1% deductible for property insurance much more expensive in premiums than a 2% deductible for hail damage?
Percent deductible for property insurance. Much more expensive. So those are deductibles for two different aspects of your home insurance policy. So sometimes, I think I mentioned that a carrier might exclude wind and hail coverage from your policy, or they might require you to carry a separate deductible for those perils. So if you have a 1% deductible for your property insurance, it's a different factor that it's taking that 1% from than if you're using a 2% deductible for hail damage. I hope that made sense and it answered your question, but let me know if it didn't.
This is actually another good question. It's a common question I get, not specifically about the part of the vehicle, but just overall. If someone has bumper damage, is it better to pay out of pocket if the estimates or repair is less than the deductible? Thank you in advance.
So if you have damage to your vehicle, if the cost of repair is less than what your deductible is, then you actually don't have coverage, right? Because essentially the way to look at your deductible is you're self-insuring for that amount. So if you have $1,000 deductible and the cost to repair the bumper is $800, then you actually don't have any coverage under your auto insurance policy.
All right, and Alita, I know you touched a little bit on this subject in the presentation, but this individual is saying their home insurance looks to be increasing by about another $2,000 coming up this next month. Is there anything they can do to lower it? They did already take a higher deductible during their last renewal period, and to get that lowered, but it's increasing again.
Okay. So yeah, I mean, working with your insurance agent to determine what the cause for that increase is. If it's just pure premium that carrier, has increased their rates by, then there's not a whole lot that you can do with that carrier to bring your premium back down. So at that point, my recommendation would be to shop the policy around with other carriers, just to make sure you're getting the best rate.
This is a good time for my financial counseling side to come out. We encourage financial counselors, we encourage everyone to shop insurances every year. Ask your current coverage, current agents to help you find coverage. Life changes happen. All kinds of things happen, just like you're reviewing your credit every year, your budget. Please make sure you're also including insurance as a part of that financial review process, because again, we would rather you all have it and not need it than need it and not have it.
Absolutely.
And then another question is, does TruStage offer long-term care coverage insurance?
We do not. No, we used to, but we no longer do.
This is a pretty specific question of how expensive of a home will you insure, and is there an upper limit?
Again, that's dependent on the carrier. So carriers will have max coverage limits that they'll cover for dwelling coverage. It's very dependent on what their appetite is, what their threshold is for home insurance policies. I know like Chubb is a carrier that will typically insure those higher valued homes. So really anything more than a 5 million dwelling limit, it's a good place for them.
Remember, the answer is always no unless you ask. The worst they can do is tell you no. This one says this attendee has been told there's only a couple of carriers that will insure her dwelling in Allen, Texas, and wants to know if TruStage covers homes in Allen, Texas, and if not, do you know any companies that do?
So I would reach out to TruStage and see if you are see if they have a market for you, if Liberty Mutual will write it, or if any one of their multi-carriers will write it. I do not specifically know of the insurance market in Allen, unfortunately. But TruStage is a great place to start. And if they're not able to help you, then I would go to a broker.
What is the advantage of an umbrella policy?
Good question. I didn't touch on umbrella policies. Basically, those are, I call them a catch-all for liability. So it lies over and above your auto and home insurance liability limits. And in the event that you have a claim that exhausts one of those underlying limits, so for example, say you have 300,000 in liability on your home policy, and you have a claim, a doctor gets injured on your property, is no longer able to use their hands. Okay, it's an extreme example, but we'll go with it, right? So their loss of income, should you be found liable for the injuries they sustained, their loss of income becomes part of that claim. Anything that they're affected financially by from the loss of being able to use their hands would be part of that claim. So if you have an umbrella policy, it'll provide you with an additional $1 million you can purchase them all the way up to 10. Some I've even seen some go up to 20 million in coverage to make sure that, again, you're protecting your net worth and protecting your nest egg.
Got a few of these questions too. Please note, this is being recorded, and a copy of this recording will be on our YouTube page for you to view at your leisure. And again, we will post when it is available through our social media network. So if you don't follow us on Facebook, Instagram, LinkedIn, please consider doing so. Next question is, how do underwriters determine reconstruction value?
Yeah, so it's actually it's your agent and or your broker that will determine the reconstruction value of your home, and they use a tool called an estimated reconstruction cost calculator. So they take all of the different building factors that go into your home. They'll look it up on the internet to see kind of what the building materials were used, ask you any specific questions they're not able to identify. And then my recommendation is that you always ask for a copy of that estimated reconstruction report that was used to determine the replacement cost of your home. And that way you can just double check it and make sure that all the correct factors were used.
I'm going to try to read this question quickly because I have a question with an example, which we always appreciate examples to help get the best defined answer is. This question is, for homeowners insurance, what is an insurer's justification for setting a predetermined amount for personal property? For example, if I had a higher value house that hadn't furnished it with much value yet, should I be able to have control over that amount? At the end, it's less that the insurance company would be on the hook to cover for, right? Just wondering why that wouldn't be a variable to help lower the premium. Thank you for your time.
Yeah, and it's a great question. So I mentioned that a lot of those coverage limits on your policy are typically just percentages of what your dwelling amount is. So for personal property, typically carriers use between 50 and 75% of the dwelling amount as the set limit for your personal property value. And really what it is that's just what they've filed the policy structure to be rated at as with the Department of Insurance. So lowering that amount, unfortunately, because they've filed that policy with the Department of Insurance, doesn't have an effect on lowering your premium. But it's a good question.
And this person is saying they've seen many messages about a few miles per day will cause much cheaper auto insurance, but I cannot find anyone who does that. I think he's asking, there are some insurance policies out there that charge you by how much you drive in a given time period. I've even seen riders for some insurance carriers that say, like, if you drive less these days or if you drive less at night, you know, they give you a discount or a benefit. So can you talk to that?
Yeah. So mileage is definitely a rating factor when it comes to auto insurance. So how frequently you're driving, how frequently you're out there on the road. Carriers take a look at that to determine rate. The less miles you're driving, the lower your rate is going to be. I will say in recent years, with this current insurance market we're in, I've seen carriers that say, you're going to have to say that you drive 10,000 miles unless you can prove it, kind of thing. And so they'll ask for oil receipts and things like that. Just because a lot of people have been under declaring their annual mileage and it's been inflating, costs a little bit. So, but yes, it is a rate factor, and a pretty heavy one at that. So if you can determine that you've been driving, you drive very low mileage, then that is a good thing to make the carrier aware of.
All right, everyone, it is 2:01. I'm going to try to get through these next couple of questions. Alethea, if you have time, we would love to get these quite few. Great, thank you. One is asking, does TruStage offer free estimates for home and multi-car?
Absolutely.
Yes, and remember, everyone, Alethea showed us, you can go to texancu.org. Under our products, you can click the insurance tab. You can also go to the resources guide and click on offers and discounts, and we have TruStage there as well. So we actually have TruStage in two spots on our website for you guys to access your Texans Credit Union membership benefits through TruStage.
Wonderful.
Some of these questions, here we go. This person is asking, does the insurance company have the right to ask you all kinds of questions regarding an accident after given all the facts to tell the person is not insured?
I'm sorry, I lost you on that one.
Oh, some of these were in our chat feature.
Oh, okay.
So I'm thinking, and Alethea, you correct me if I'm wrong because I am not the expert. You should be talking to your insurance company only, and they shouldn't, the other person's insurance shouldn't be reaching out to you, I would think. And if they don't have insurance, then they wouldn't be reaching out to you. But it's always best to work with your insurance provider if you are in an accident.
Yes, yeah. I'm sorry, I missed the question initially, so I'm not sure I can answer it fully. But yeah, I mean, in the event of an accident, it's always good to work with your insurance carrier. If you are working with the other insurance carrier, they might need to do some fact finding, so they might reach out to you. But yes, it is best to work through your insurance carrier.
That one, for the person who asked that is a very specific question. I would advise you to reach out directly to your carrier and ask them more specifically. They will have better guidance for you on that question because that is a very specific one. And each carrier will have their own policy, their own underwriting, everything. So you want to make sure you're getting the direct answer from your coverage company. Is TruStage part of Liberty Mutual? I know you kind of talked about the relationship before.
Yeah, no, they're just a partner of ours. We are.
This is actually a good question. Can life insurance be tied to the value of your home?
I mean, so really what you want to look at with life insurance is making sure that you're providing some financial stability, to your loved ones. So I wouldn't necessarily tie it to the value of your home. Now, what some people will do is if they have, let's say they have a 30-year mortgage, they'll take out a 30-year term life insurance policy for the amount of their mortgage. And so that way, in the event that you pass away, your loved ones aren't responsible for the cost of mortgage. But yeah, you typically want to use life insurance as a income replacement.
3 more questions. We're getting there. This is actually a good question. Love it when parents ask questions about, especially when it comes to their childhood insurance. Which option would be more cost effective? Adding your 18-year-old child to the parents' auto insurance policy, or letting them get their own policy?
So what you really want to make sure you're doing is purchasing auto insurance. If they're still living with you and in your home, then the auto insurance, then obviously have them on your auto insurance policy. If they are living outside of the home, then you want to go ahead and purchase them their own auto insurance policy. Another recommendation that I always have for young drivers is, not buying them the top vehicle right out the gate, and really buying them kind of a lower valued vehicle where you feel more comfortable possibly not carrying property damage coverage on that vehicle and just liability coverage for them. And that way, that really, because the property damage is really what drives the costs there for young drivers.
And when I'm in school talking to kids about insurance, believe it or not, kids actually ask about insurance questions, which is great. One of the most common ones I get is, oh, I don't want to buy a red or yellow car because that's more inspections to insure. That is actually a myth. The color typically does not determine any type of value. But where that stems from is because brighter colors are easily more noticed. That is, that's why you see more colorful cars being pulled over for, certain types of tickets or discussions. So that's where that kind of societal myth came from. But yeah, and I agree with Alethea. A car is a tool to get you from point A to point B. You don't need to have, this most super expensive car as your first one. If you do, no judgment, but just saying, especially for first time driver getting new to the world, let's just get them something that works. This one is another umbrella policy question, Alethea. Are there liability umbrella policies available in today's markets? For example, have a lower car insurance coverage with $1 million policy or $1 million umbrella over the policies.
Yeah, so yes, there are liability umbrella policies. We're not in a hard market on those. Those are still readily available. But however, they do typically require you to carry a certain underlying liability limit on your auto and home policy. So with most umbrella policies, we see them require you to carry 250,000, 500,000 in liability coverage. And then the $1 million would be over and above that. And for home, it's typically around 300,000, and liability is the minimum, and then the $1 million would go over and above that.
Our last question is, and actually this is a very good question. I wouldn't have thought to ask this. If you're moving out of state, is there a time frame where you need to change insurance companies for auto insurance?
So insurance is tied to where your vehicle is registered. So If your vehicle is registered in a particular state, that's where you need to have the insurance policy purchased from.
And another questions come in about premiums taken directly from their credit union account. Alethea, I'll take this one if you don't mind. If the insurance company allows you for a payment plan and they allow you to use your, credit union debit card or account information, then yes, we allow for auto pays to happen. We have them for, I have them for my policy, and we do the same thing for other bills. And most insurance companies do allow or give you the option for pay it all up front or break it down monthly. Alethea, you can add on to it if you want to, just to make sure I'm speaking correctly. Awesome. And another thing I want to touch on, another membership benefit on top of everything Alethea shared with us today, she did talk about credit in relation to insurance a little bit in her presentation. She's correct. Credit is used for many, many things these days, not just loan products. It's, it can be a determination factor for insurance coverage. So please make sure while you're shopping for insurance every year, making sure you're getting the best deal, please be sure you're checking your credit, making sure everything is up to date. Our members at Texans Credit Union can check their credit every day through a tool in our online and mobile banking portal called Credit Connection. So make sure you're using that too, because we want to make sure your credit reports are up to date so you're getting the best deal on insurance coverage. So I wanted to plug that in before we ended, but that is all the questions. Alethea, thank you so much for being here and for sticking around for a few extra questions. This was the most questions we've gotten, and I was very happy to see that a lot of our members had great insurance questions. Again, this is not a topic we talk about enough in the world today, and we should be talking about it more. If you want to reach Alethea or anyone at TruStage, please go to our website and click on the TruStage portal. There is contact information down at the bottom of that screen there. Although Alethea is a wealth of knowledge, she's not the one selling or underwriting policies. So she may be able to help you, but it's probably best to talk specifically with the agents to do that. But thank you all for coming here. Alethea, is there anything you want to say to wrap up? I'll give you the last word.
No, I just thank you for having me. I'm very glad to see that your members are so engaged in the insurance world. I know it's a lot going on right now in that space. So, and maybe one day we'll have me back and we can do it again.
We hope so, because there's a lot of TruStage offered. This was a general session, but yes, I would love to have you back to talk more in depth about life insurance, because I think that's a really big question, something a lot of people are considering more and more today. But yes, we would love to have you back.
Awesome. Well, thank you.
All right, everyone. Thank you for your time and have a wonderful day.
Bye.